Thanks for tuning into the All Funds Network podcast. My name is Mike Schroeder. Today I'm here with my co-host Steinke, and we are joined by Joe Sando and Mark Adams of Fortuna Funds. Joe and Mark, thanks a lot for joining us today.
Thanks for having us. Appreciate it.
Thank you.
Cool. Well, we got a lot to jump into. We're going to be talking about the recent ETF that you guys launched. We'll be talking about some of the ETFs that you guys have coming down the pipeline. And I some of the things that I'm really interested in to get into with you guys is just like the process of getting it set up, things like that. But let's just start with backgrounds. Joe, why don't you start off telling us about your background and kick it over to Mark afterwards.
Yeah, sure. So my background is I have nearly 20 years of experience in sales and marketing distribution in the investment management world. And in 2008, I actually met Mark for the first time and interviewed with him. I interviewed for an analyst position that he had at a hedge fund he was working for. And as soon as I sat down with him, he looked me in the eye and he asked me, he said, "So what makes you want to be an analyst?" And I laughed and I looked right back at him and I said, "Well, I don't." And he said, "Well, what are you doing here?" And I said, "Well, I wanted to get my foot in the door. I want to do sales for you guys." And he laughed and he was like, "Well, we're not hiring a marketer right now." And, that was the end of it, or so we thought. And then you fast forward to 2017, and I started representing not one, but two mutual funds that Mark manages. And we had a lot of success. We had a lot of fun. And more importantly, we found a great working rhythm. And we decided a few years into that we were sitting on a plane and we were kicking around ideas for a modernized investment management firm, and an ETF shop came to our brain, and we decided to stop kind of everything we were doing then and there and start Fortuna Funds. And it took a couple years to get it off the ground. It was not easy. But it was a lot of fun. But my background has been in the sales and marketing side, whereas Mark's has been in portfolio management the last 20 years. And I will hit pause there and turn it over to my partner, Mark.
Yeah. Okay. Thanks, Joe. Like Joe said, I've been on the PM side for years. I've been trading options since '02, straight out of grad school. And that's really what my skill set. I'm just an options trader through and through. You give me an underlying, I can make you a nice options hedge or whatever you want to accomplish based on that. And that's really, kind of like Joe said, it's what I bring to the table. And that's, we found the ETF world to be very conducive to that now. Probably wasn't the case 4 or 5 years ago. And I'm sure we'll get into the how and the why and the what's all about that. But that's really the background. It's been pretty straightforward. 20 plus years, one firm. And, then we said, hey, let's do our own thing, set our own shingle and make Fortuna. So that's where we are now.
Well, yeah, thanks for giving us your background. Why don't you tell us real quick, what are you guys working on at Fortuna Funds? What was really the inspiration to start it? And, what's your first product to market?
Sure, Mark. I'll take that. Sure. Yeah, our first product right now is the Fortuna Hedge Bitcoin Fund, HBTC. And really, we saw that, when we first were trying to figure out how we want to approach the ETF world, we knew we wanted to use options because we have that, arrow in our quiver. So when we were looking around, our first idea was a hedged gold product. Joe's an avid, precious metals collector and really was into, the idea of, hey, let's put a gold product out there, gold and silver, something like that. It just didn't work as well on paper. Why hedge a hedge, as we say. So then we kind of were going down, this is a couple of years ago, we're going down the path of trying to figure out what is the best thing that's not out there, something we can apply option trading to and really differentiate ourselves. And, lo and behold, we're poking around one day and I, run a little back test on Bitcoin to see how we can put a nice options overlay onto it and how it would work. And, it was kind of one of those eureka moments. We're like, oh my gosh, this is amazing. This looks brilliant. Has a great story. How do we do it? So that's when the kind of the wheels were turning of, okay, we can use futures, the futures and options on futures to do this. And then the road starts going. It's like, well, maybe this is a better avenue and here's a better avenue. But once we found, the not just the clean back test, everyone's seen a beautiful back test, but the story and how it plays out and, how it actually works in a portfolio, we were like, all right, this is it. We have to go full metal, pedal the metal on this angle right now. And that's really what got us from the back of the napkin to, you know, an ETF in the real world now, just to really push forward. Anything you want to add anything to that, Joe?
No, I mean, very, very well said. I think that HBTC, you know, as our first product is very important to us, as well as, you know, the firm and everything else. We will be launching future products, but the product, you know, our first product that we launched was the Hedge Bitcoin Fund.
Yeah, that's really cool, guys. A couple questions come to mind. Obviously, coming from a traditional finance background, sounds like you both have come from, which is great. Getting into the Bitcoin space, obviously, you found us kind of a unique perspective or a way to kind of solve for what you're looking to solve for with the strategy. Was it completely down the rabbit hole with Bitcoin digital assets? I mean, everybody has different paths of how they go through the process. They adopt. They think, you know, Bitcoin's a, you know, they go through the whole process of Satoshi's, you know, white paper, the whole deal. What was the kind of the journey initially? Was it, hey, this was a unique way to solve for what we need to solve for our strategy? Or was there more to it?
Well, what we really figured out was that volatility was our friend in any strategy that we're gonna launch. And so when Mark mentioned that we were thinking of doing a hedge gold product, that was really the reason why we didn't do it, was because there wasn't enough volatility. And so as we were continuing to ride on the back of the napkin, we were just thinking of volatile asset classes. And Mark was like, hey, you know, let's try this on Bitcoin. And here we are. Yeah. So, you know, it was just the perfect asset class to do what is called an uncapped collar options overlay on top of.
And I always like to point out that we're not the traditional, like you say, we come the TradFi background, as they say. You know, we're not Bitcoin bros. We've, you know, I've owned a little bit back in the day, but I'm not, you know, here saying it's going to be, you know, you're going to buy your next groceries with Bitcoin. Not saying that, but we definitely recognize it has a place in a portfolio. And, you know, if you go back in time, like the guys are, you know, holding the coins in cold storage or on a USB stick, and then it kind of evolves over time to the ETF space, to now where you can trade options on it. It's becoming, I don't want to say, you know, institutionalized, but it's the broad mass kind of adoption curve. You know, we can finally do what we want to do on that because of the options. You know, we're not saying, hey, here's, you know, you're just going to place the dollar, but it is kind of like a digital gold. I don't think that's a perfect corollary, but it is like that store of value that they're not making more of. So you're going to see it have a place, and you're you know, more and more people are adopting it. We think we found a better way of doing that. You know, we see HBTC as a better way of owning Bitcoin for most people. Some people want to just, you know, hold on for dear life and, you know, diamond hands, never going to sell no matter what. And it's kind of religion, and that's fine. And there's a lot of people like that, and that's wonderful. For a lot of other people that are, you know, you're 45 years old and you've got a kid going into college and you're going to put a little IRA money into it. Okay, maybe this is probably a better way than just owning outright, because it is pretty volatile.
Yeah,
and it's gonna move. So as we've seen,
it makes sense.
Right.
And from I guess, what was the reason behind an ETF structure? Because I mean, obviously, private fund structure is less costly. ETF is more is it more and more retail product you guys are looking to focus on?
Well, the main reason really was we wanted to bring institutional style investing to the retail public. And we looked at mutual funds, which we're both, Mark and I have a background in, and ETFs, and the ETFs are the future. So that's why we selected that vehicle, and we think it's the best vehicle for everyday investors.
Now, with the strategy itself, tell us a little bit about the options strategy that you guys have for HBTC.
Sure. So essentially what we'll do, we see, you know, there's plenty of other places out there. You can get a 1x Bitcoin, you can get 2x Bitcoin, you can do covered calls on there. We see with our value add is saying, you know, why cap something like this? You don't want to put a collar around this, because, you know, it can be up 50% tomorrow. It can be up 50% in a week, whatever. It just moves. So why would you kind of limit yourself? So in looking at this, you know, we say, what about, you know, just like a put spread or something like that? But it can really move beyond that. So in playing around with it, like Joe mentioned earlier, we call it an uncapped collar. Essentially what you're doing is, you know, we're going long 1x Bitcoin through options. We're using a combination of options to replicate a 1x long, but we're 1x long, and then we have a put purchased 8, 10, 12% below the market at trade inception, and then we sell a call spread above the market. So selling a call spread, not selling an outright call, selling a call spread, so that you're going to take in a little premium to finance the purchase of that put. But then when it goes parabolic, and it does, as we've seen, you'll go through that call spread and you'll participate 1x after that. So, we're not going to be 100% replicating a 1x above that because of the value of that call spread you're selling, but you're going to get most of the upside and really protect your downside at the same time. So it's kind of the best of the both worlds, but, your best of the both worlds, kind of idea, in that we can, protect you and also, give you participation too.
With the structure, what are some kind of like ideal moves you guys are looking for? Like, is it really ideal for like those big, what we hope to see 10, 20% days?
Up and down. Yep.
Yeah. So kind
exactly.
of
Choppy volatility. Sorry to cut you off there. Yeah.
Yeah, no, that answers it. Basically, you guys are looking for those high volatility days.
Exactly. Yeah, because if it's just going to be boring and just drift higher, you just buy the 1x or the 2x, and you don't need us for that. But we know, we've seen it already. I mean, everyone thought, around the election, oh, Bitcoin's going to the moon. Well, what happened right after the election? It just sold off pretty well, right into the even around the, around the tariffs in April. Bitcoin started to sell off pretty well, and then it kind of found its footing. It's been on a tear since then, which is great. But we like to see that volatility. We want to see, like Joe said, volatility is our friend in this. We want to see that volatility, because then that really proves the value of the option overlay.
One more question before we continue on this path. The gold side of things. You mentioned, I think the gold you initially wanted to do with gold, and it didn't work out because gold wasn't volatile enough. Is that right?
Mm-hmm.
Correct.
Have things changed for gold? Like, is this a product that would make sense now that gold's kind of near all-time highs?
All-time highs. It could. I don't think the volatility, without looking at it, I'm not sure, but I don't think the volatility has increased enough to make it viable. Even though I do think a hedge on anything at all-time highs is an idea. But that leads us down, that's a great segue to what we're thinking about doing for our next product, which is an energy ETF, a hedged energy ETF, I should say. And we're looking to not just track the price of crude oil, but to encompass the entire energy supply chain. And so it's more of an allocation for an everyday investor into energy versus a speculative trade. And so we're working out the kinks on that, but it'll have a similar uncapped collar on top of that, where we limit the downside risk of energy moves, but we participate uncapped on the upside.
Very cool. When the ETF went live is it March?
Mm-hmm. March 19th.
Okay, cool. We've had a couple months. It's a very small sample size. How has it performed relative to like what you guys expected so far?
Pretty much exactly as expected, because what you've seen is, when the market really started to tail off in April, we started to differentiate ourselves. We're using options on Ibit. That's just like the most liquid options market out there that we can use. So as it kind of sold off, our performance, when the market goes down before we're getting to that long put, we're going to participate, but not 100%, of course. And then our performance really started to flatten out as it kind of kept tailing off. Then, of course, it rallied. So once it rallies, over the next few months, we're going to lag as it rallies because of that call spread, right? So it did exactly what we wanted to do. What we've not seen is those real big down moves. The first down move, since we launched, was not large enough to really show the value of the long put, where it would really, we're deep in the money on our long put, and, we're just sitting flat and the market's continuing lower, or the Bitcoin is continuing lower. So we didn't see that, but we definitely saw how it traded exactly how it was designed to. And, I would love to say we're, beating Bitcoin by 30% right now, but we just haven't seen that, that drawdown yet in Bitcoin that I'm sure will come.
Yeah.
Yeah.
Right.
I mean, our portfolio will win by losing less in these drawdown type environments.
Makes sense. Yeah. A couple questions on my side, guys. Getting back to more just kind of the setting up the fund, setting up the ETF itself. in the new kind of regime environment that we live in today with Bitcoin. I have a background also in mutual funds and ETFs. Kind of go into that process with you guys when you have Bitcoin as kind of an asset class that you're getting into with going through the fund formation, setting up the board, the 15C presentation, all that stuff that goes into it. What was the feedback of maybe potential investors, RIAs, along with kind of just setting up the fund from a formation point of view, going back and forth? I mean, because it can be a little daunting, as you guys know, with the setup process.
On the setup side, I can speak to. I know Joe can talk to his conversations with RIAs, but we worked with U.S. Bank to join the Lyft Trust there, and they were great. They've been. We knew we wanted to own the advisor. We didn't want to. There's a lot of ETF options where you can be a sub advisor. We knew we wanted to go the route of like joining a serious trust like that. And it was really, I don't want to say that was the easy part. There's a whole lot of hard things to figure out, but getting, the board to, convince them and, show our expertise, that was the easy part. They were wonderful. They saw the vision. They saw what we were about. They saw what we've done in our careers to say, okay, we can, we'll place a bet on these guys. They know what they're doing. We've got it figured out. That's okay. So that they were great to work with. They were easy. There's a lot of other things between, other than that and getting going live that were headaches and pulling hair out and wondering if we're ever actually going to launch. But, those are that was not the problem with the board and the 15C.
Conversations with RIAs kind of after the fact that we've launched the fund have been very positive. We had a great allocation late last week from an RIA in Georgia, which was very exciting. And, I would say with conversations that I've had with them, the worst kind of feedback we've had was, hey, I don't like Bitcoin. I'm not going to put my clients in Bitcoin. However, my clients ask me all the time about Bitcoin. And if they're going to do it away from me, I'd rather them be doing it in a product like yours. I'll be sure to share the ticker. That's the worst thing we've heard.
Yeah.
So being in 20 years of sales, that ain't the worst thing that I've ever heard, right? So it's good. So it's been exciting. It's been a lot of fun it's a great story to tell. I've told a lot of stories in sales and marketing throughout my career, and this is definitely the most fun. Everybody, even if you hate it, you want to hear about it, and people want to talk about it. It's an exciting topic, and we're happy to be here in the ETF world.
It's definitely obviously providing a unique wrapper, right? Tax advantage. Nobody has to worry about keys or wallets, to your guys' point. Makes it simple and streamlined for folks who don't want to know how the sausage is made, just want to take advantage of the strategy, if you will, from a volatility perspective, like you guys said, right?
Yeah. The setup part of the fund. So how long, give us kind of ballpark of how long this took for you guys.
Was the question from how long it took to get the ETF formed from when we started, or how long from our plane flight from when we decided to do this till because the plane flight was in 2021, and then here we are.
Let's start with the legal side of things. You guys go talk to U.S. Bank. Maybe let's start that at day one. What is the process? Kind of walk us through the whole process, because I think this is something that's really interesting for other fund managers that are thinking about doing something like this.
Right. Yeah. Something I'll let Mark chime in on a lot of that, but something that's important for others to know, like Mark mentioned earlier, is there's a lot of options that you can take when you do this. You can. There's other companies that have full service models. Well, they'll do everything operationally for you, and trust me, there's value there because there's a lot of operational headaches that go into forming an ETF. But that wasn't the right path for us because we were going to be a sub advisor, and that was just an absolute non-starter for us. So we did more of a DIY model through U.S. Bank, which Mark talked about a little bit, and they, like he said, have been fantastic. And Mark, when did we start that process with?
I want to say June, July. We had like a kickoff call, and then it's like, all right, here's the planning, here's the steps, and here's the 700 people at U.S. Bank you'll talk to over this term. And we're like, because in my history, I've launched, go back to LP funds, UCITS, mutual funds, SMAs all along. So I've seen a lot of the different structures. I've seen those. The ETF checks the final box now, I guess, as far as things to do in the investment world. But the headaches are from just the structure of the industry. And as we were kind of seeing when we first launched, we're like, okay, it's call it June. We'd love to be launched by the first of the year. And okay, great. That's an aggressive timeline. We were told. Here's the things that have to happen, the deadlines to meet. So as far as the legal setup, all these things, they were U.S. Bank kind of steers you toward here's a legal we can use, and it's a lot cheaper if you use us versus going your own route. Great, easy. A lot of the things, okay, hey, you're going to have to go find, hey, Fortuna, it is your responsibility to find your lead market maker, set up your trading, do all these things, because that is their model. That is how U.S. Bank works. And for a first-time ETF, company like us, it was a little difficult at times, especially the market maker. The lead market maker was, and we're not breaking news here. That was the hardest part of this by far, because we originally set up to use futures and futures options, because in June of 2024, that was really the only game. We had heard rumblings about options on, the ETFs coming down the pipe, but they weren't there. There was no guarantee of them ever coming. So we said, let's just use the futures and futures options. That was a non-starter for pretty much every market maker. They're either we like futures or we like options or we like Bitcoin, not all three. So that was a difficult, thing to do. And then once Ibit came around, I mean, we were literally pretty much ready to go in mid-December, probably December 15th.
Early December.
Everything was buttoned up, 15C approved, everything ready to go. It's just the market maker was the last little bit. That was the hard part. And then once Ibit options really came out and became really liquid and were the main player in town, we had some conversations with people, and they were like, oh, we can, if you use that, we can market make this all day. And, without, giving away too much of the ending, we worked with Wolverine on this, and they were great. They were like, literally took 2 phone calls to walk through the idea. And we've talked to them before about things. I've been in the industry for a while, so I was familiar with them. Once we had a call with them, 3 weeks later, we were launched. There's very much, you just find the right person. There's a fit. So
Wolverine was spectacular, in how we got that connection was through the SIBO in Chicago there. They were fantastic at helping us line up a lead market maker and everything. So, I mean, from SIBO to Wolverine, they were amazing, and we look forward to working with them in the future as well.
Definitely.
Yeah. So you kind of went through the process. So sub-advising wasn't going to be your cup of tea. I totally get that.
Right.
When I want to control your own destiny, have your own strategy as a registered investment advisor for your own fund, correct?
Correct.
And I'm assuming you can tell me if I'm wrong, it's more about you're in the series or shared trust model with U.S. Bank versus standalone trust. So you use a common board to kind of save on costs a bit there to kind of start the process faster. Okay. That sounds great.
Yeah. And part of the reason we've both seen the downsides of being a sub-advisor. So the mutual funds that I was, managing with a hedge fund structure, or say hedge fund style of trading, was part of we were a sub-advisor with a larger company, and Joe worked with that company. So we've seen the downsides of that. It works great for a lot of people. If you, just have a great trading idea and don't want to deal with any of the admin or anything, great, wonderful solution for you. I'm okay with doing some of that lift. Joe's okay with doing some of that lift, because we know we want to have a suite of ETFs. So once we have that, we want to have it and control our own destiny that way, like you say.
Awesome. Very cool.
Yeah. In terms of like the ETF cost, what are you guys looking at in terms of, just kind of a ballpark for the setup you guys have, like in terms of getting it up and running, and then also, maybe some of the ongoing costs?
Sure.
Right. I mean, the upfront cost, it's not cheap. Like, however you slice this is not cheap, whether you do a white label model or a do-it-yourself model. It's not cheap. I think on the upfront side, you're looking at what, Mark, at least 6 figures
Low six figures, 125
low
total, get off the ground. But
Okay. And then the ongoing is where it gets expensive.
yes,
If you don't have the assets to offset it.
100%.
So that's, that's something that anybody coming into the space would need to take into account, whether to have, seed money in place to cover that, or enough of a nest egg to cover the expenses for however long in time they think that they're willing to do it. Is kind of how I would share it, because it does get very expensive, because there's a lot of legal bills, and then and on top of formation costs, then you've got marketing costs, and then you've got like I just mentioned, legal and PR, and I mean it doesn't stop. So you really you don't want to just half-ass come into this unless you're really serious about it and have the right business partner and things like that, and everything needs to make sense for you. And but that said, to you and your listeners, I mean, we're happy to share our thoughts with anybody that may have questions regarding that. So.
And we've definitely not opted to go the cheapest route, because we know there's a lot of value in marketing. It's, people have told us, from day one, these are sold, not bought. You have to tell people about them, because there are more ETFs and mutual funds than are stocks. So that tells you there's a lot of tickers out there. And I'll say this, we realized very early getting in a good ticker is very important. So HBTC, Hedge Bitcoin, we were, as soon as we saw those available, we're like, go grab it, and we were able to kind of warehouse or kind of stake claim to a few tickers that we know we'll want to use in the future. But like Joe said, I mean, there are, between the marketing and PR, things like that you don't have to spend. Your lift can be just your admin and the legal and whatnot. Once it's out there, it's out there. But I think to do this properly, you do have to spend a pretty penny. But if it's successful, you get that back, no problem.
Yeah.
So that's the key, just making sure it works.
Right. To your guys' point earlier, obviously, even going from a mutual fund background to ETFs, mutual funds, you can charge more in, right? You can charge 100 basis points in a mutual fund. You have a lower cost product in ETF, which means your operational break even has to be higher to cover cost. So, and obviously you're selling it, you're distributing it in different, broker dealers versus platforms out there, things like that. So things are a little bit different and how you kind of operate that. Then you have the Bitcoin
exactly
on top of it.
It's a dual-edged sword, the Bitcoin thing. Because first, like you say, for some people, they're gonna be like, this is the greatest thing in the world. Other people are like, I don't want to touch Bitcoin. I can't do that. But, the one good thing we noticed really early on the ETF space, you're available at launch on a lot of platforms, not the big wires, of course. There's plenty of places. You have $1 in assets that you can be available at these places. So, that's, I think, the ability and the relationships you have at those places can really carry you in those early days.
Yeah, and you're giving investors a 1099 versus a K1. I mean, that's a big thing.
It's huge.
A lot of people like that as well. So yeah, very exciting.
Very important.
Yeah. Let's talk about kind of how you guys see this. We've been in it for a couple months now here. March through July. So let's say 3-4 months. How do you guys envision this kind of going over time in terms of volumes, in terms of like getting more people on board? Joe, I know you're doing a lot of the marketing side. Kind of maybe talk to us about a little bit of like the distribution and kind of getting it out there.
Yeah, I mean, in terms of distribution and marketing, it's been a lift. I mean, it's kind of the chicken and the egg problem. You have to have a certain amount of assets to be able to market it to certain platforms and firms. So, to Mark's point, there are a lot of firms where we are targeting right now, where we are currently available, in a large population of that list is the RIAs in general. So I would say the RIAs are our main focus, and we have our marketing team is working hard on kind of email campaigns and gearing RIAs to our website, things like that. We are slowly but surely growing the sales team. We have one sales partner right now, and he has been Mark and I know him pretty well, and he's been great so far. He's actually got us the RIA from Georgia that placed the trade last week, so it was awesome. So that's how we're growing. I mean, ultimately the sales team will grow as well and in things, but it's one step at a time. Our first bogey to hit is 25 million, so we can get on to some of the more platforms where the financial advisors are, so we can tell our story to them as well to help their clients in digital assets.
I guess on that vein, kind of going through that process of allocation, like what are the RAs thinking about when like allocating to this type of strategy? What are you guys' conversations around that? Like, what's the level allocation percentage?
I'd say we've heard anywhere from 1% to 6%. Mark and I are telling everybody that this is, not a 10% allocation. This is a 5% allocation. And we're the RIAs are kind of lining up with the same percentage, at 1 to 6. So is what we've heard. And that's in line with, Jamie Dimon. I don't want to quote him because I don't remember exactly what number he said, but it was in the 1 to 6 range, and other wealth management firms as well. So are kind of targeting the same percentage rate. So
Makes sense. Yeah, that's kind of what we heard for just like Bitcoin allocations, usually, low single digits.
We talked about the setup. I know that was a big deal that we wanted to cover. Really, what sets us apart is, like Joe said. I mean, we want volatility. We're looking for asset classes. Because it's not quite this, but I use this analogy. It's like to the man with the hammer, the world's a nail. I can put a nice option strategy around something, as long as the options market is liquid, as long as it's makes sense. It's a hedge. It's something you want to hedge. So in a perfect world, if we could launch an ETF tomorrow, kind of thing, just like in one day, here's a hot stock, here's a, you could use it like an AI focused one. I'm not going to because it takes too long to get it launched, but there's a lot of things you can do. I think that's what's so great about the ETF world. You find an asset that someone is interested in and wants to hedge it, then you need to skate where that puck is going, and that takes a little bit of time. But I think it's a really interesting and fascinating time that we're in, that you can do stuff like that. Options are now a thing you could do. We couldn't have done this 5 years ago. I'd love to have said, oh, hey, here's our, in 2020, here's a hedge Bitcoin ETF, and things are going crazy. Well, the options market wasn't ready for it. And then the market makers weren't ready for it. And now these are all coming together. And I think we just, I think we found a great niche at the perfect time that the market's ready for, and the service providers and the plumbing is all ready for as well.
Yeah. What do you guys see like for the rest of the year, Q3, Q4, as we go into the end of the year here? What the market looks like from your guys' lens?
I hope more volatile. I hope that's you'll see the the headlines of, oh, Bitcoin down 25% this month, and then next month up 55%, and it's that type of movement that is I think really befits what we're doing, and also is it would kind of fit with what you've seen in the past. I mean, it's been a little calm in the last couple of weeks, just a steady drift higher. I'd love to see a dose of volatility to kind of really show, hey, here's what we're doing, and here's why you need us. No one wants to hedge something that goes straight up.
That's right.
Yeah. What advice do you guys have for aspiring fund managers out there?
Oh yeah, don't do it. No. Really, just to make sure you're mentally 100% ready, and that this is not going to go as smooth as you think it is throughout the process. Not to discourage you. I mean, I definitely think that this is a viable path for a lot of people. It's just not easy. And where we, Mark mentioned the lead market making bottleneck, that's really where we got hung up. I mean, we were sitting there for 3 months every weekday, waking up being like, are we going to get a call today that we're live? And, at the end of the day, nobody was working for us except us until we got on the phone with SIBO. So that really helped us. So there's that. And, I would talk to as many different providers as you can. When it comes to listing, I would like SIBO, NASDAQ, New York Stock Exchange. I would talk to all of them, find out what's best for you. We ended up not going with our first selection there, and that's a learning experience that we had, and we ended up going with SIBO. So, like I said, I can't say enough about them. I would certainly give them the time of day for the listing if you were an aspiring manager, because they're pretty great over there. So,
yeah. Yeah, I would throw in, one, make sure you've got a great team around you and a great partner, because there's going to be, if you've not done it before and you're just like, say you're just like a PM, you're like, I've got a great strategy and I want to do this. If you're not going to go the white label route, you need to find a great team around you. Pick your marketers, pick your back office, all this stuff, get it buttoned up. And it's going to take some time, and find people. What we found is a lot of people in the industry are willing to share. Hey, here's how I've done it. And, I'll share names upon request. There's a lot of people in this industry that are very friendly and will say, hey, I want to share, because one, it's the rising tide, especially if you're this type of manager and they're doing this type of thing. You're not necessarily competing. Yeah, at the end of the day, we are all competing for the same kind of dollar, but not really. And there's enough, ETF money to go around that, if I got 50 million, I'm not taking it from you. So that's, find the right team, trust, and work your tail off, because it's not easy, but like Joe said, it's like, there's a lot of times we're just sitting here waiting to go. We were ready to do all this work into it, and it's just like 3 months of waiting. And then but we were having conversations the entire time. Keep going, keep grinding, finding, it sounds like the market maker is still a problem for ETFs. I've heard that from people that have launched 20 ETFs, and their 21st was just as hard as number one, because to find that market maker situation, they are in control of what gets launched now, it seems like. So figure that out. But maybe in 6 months, if someone's rewatching this in early 26, maybe the custodial relationship is the hard part. I don't know. Who knows what that's going to be? But there's so many pieces, like you said, Skyler, that there was, doing it in an LP or just a private fund would be so much easier. But that's not what we wanted to do. We wanted to make this where, our friends who may not have, 250,000 to invest, they can invest $25, or your grandmother doesn't want to put, 250K in it. She wants to put, $5,000 to support her grandson, whatever, things like that. That is a big deal, we think. And, something we were passionate about.
Yeah. Accessibility.
Yep.
I love it. Awesome. Well, Bark and Joe, this has been a lot of fun. Where could people go to connect with you guys and learn more about Fortuna Funds?
So to learn more about us, go to fortunafunds.com. That's our website. You can follow us on Instagram, go to, LinkedIn, Fortuna Funds, wherever. I mean, I guess we're on X. We're on all the platforms, but really the website's really going to see where you see most of our
right. And how you can invest is really any of your own online personal trading accounts, E-Trade, Schwab, Pershing, Fidelity, TD, anything like that. So
HBTC, right?
HBTC, Fortuna Hedge Bitcoin Fund. Yep.
Amazing, guys. This has been a lot of fun, guys. We'll make sure to include all your contact info in the show notes. And thanks for joining us today.